This conference will now be recorded.
All right, so welcome to this edition of Traders Exchange. As always, everything that we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. So, got some good questions coming in for this edition. And, we're going to talk a little bit about psychology. We got some good stuff. So let's start off with our first question. So my question is, I've become obsessed with finding reaction prints above a show of hand in a cheaper stock, but does the same apply for an everyday stock like Walmart, AMD, NKLA? On days where cheap stocks aren't very hot, some everyday stocks are brought up now and then, and I second guess my expectations for what should be in the prints and the reaction the prints are getting. Very interesting question. So, what's the reason I don't bring up everyday stocks? There's one very simple reason that I don't bring up everyday stocks. I still look at them, I still trade them, but I don't bring them up. Why? Tougher level to trade. So not always. Like for instance, today Walmart was a very easy trade, but it technically is an everyday type stock. $2.50, 12 million shares. You pretty much could find a trade in almost every single day. But they are tougher because a name brand stock is always going to have some of the best market makers in them. So you're not wrong there. Because they're everyday. Well, that's by definition, yes. Encyclopedia versus Spark Notes, and that's the big thing right there. It's literally their stories are just so long. Now, don't get me wrong. Every once in a while, I don't find everyday stocks hard to trade at all, but they're harder to trade. There's typically a lot more that goes on within the prints than something that just pops up that day because it already has a long story. Now, Apple is one of the best examples right now because Apple, when it's split, guess what? Is there a story in Apple? Now, I understand, yes, there is, but is there a story in Apple, or is it pretty much brand new when this just happened? Obviously, it's split. It's pretty much a new story because we're at a new price level. Now, we could go back to when, and if you remember what it was like when it split on and it broke underneath 100 and, came in there. But it's almost became a spark note because now there's new trading at new prices. There's the amount of positions that are going to be coming in are going to be completely different because guess what? To trade a $500 stock versus a $130 stock, if let's say that something is 90%, well, guess what? You're going to put a lot more money into something that's $133 than you're going to put into something that's $500. So I don't overall think they're harder. I just think there's way more that goes into it. At the end of the day, this is the answer to your question. Do prints need to make money? Do market makers need to make money in their prints? They do. Okay, do prints lie? Ever? Because sometimes it might not go exactly how you thought, but then the reaction shows you exactly what they meant. Prints do not lie. So it works exactly the same in every single stock across the board. No matter what, the same way to tape read on ABC is the same way to tape read on XYZ. It's the same exact thing. Now, what do we base that off of? What do we base that off of? Because not every stock can be tape read the exact same way, but what do we base it off of? It's a very simple answer. There's nothing else that changes. Well, percentages always, but what are we basing tape reading off? I don't care what stock it is. I could find how to tape read it in about give or take 2 seconds. Probably one, but I'll give myself the extra second. When we look at a stock, I don't care if it's name brand, I don't care if it's Chinese, American, Canadian, well, not Canadian because we don't trade that exchange, but I don't care what it is. What do we start with? In order to tape read a stock, what do we need to start with? Personality, but that doesn't help us tape read. Well, 100, actually, that's completely wrong. 100% it does, Eric, but there's something we have to start with. And by personality, but you're missing a word in front of it. What do we start with? All right, so we almost, so show of hand doesn't mean anything unless we know this one thing. There we go. So it was the opposite between Eric and Chandler, but print personality. That's all we need to tape read a stock is its print personality. Does anything else actually matter in order to be able to interpret the prints that we see? Really, anything else matter to start off? Obviously, there's a billion things that matter, but to start off with reading a stock, I don't care if it's name brand, anything else. We have to start with print personality, don't we? Guys, is 10 prints always going to be a show of hand? No. Can 2 prints be a show of hand? Yes. So what do we have to start with? Print personality, number one thing in order to tape read. We have to be able to identify a print personality within a stock. Let's see, do I have any really good examples of what I'm about to say? Yeah, we'll use Apple for 1 second. Okay, if this was all I saw in Apple, can I really have a print personality? So this is right here. This is all I saw with an Apple. Could I really have a print personality? No, so there's just nothing there. So what we have to do is we have to see something that shows us the dominant market maker. Guess what? Is this outside print personality? Hell yes, it is. Is this outside print personality? So yes and no, because some of it isn't, but guess what? We know there's a huge interest in that selling that came in at that 130 level. So print personality is where we start. Once we know print personality, our reaction print's important. Once we know our print personality, our reaction print's important. Does it matter if it's name brand? Does it matter the ticker? Does it matter anything else? Nope. As long as we know what the print personality is, reaction prints, every stock is always going to trade the same exact way. And when I say the same exact way, we're going to be looking for the same exact things. We talked about this in the workshop last week, is how to understand where retail and market makers are. So if we understand what market makers are, we understand the spots that retail are going to be, we pretty much know exactly what's going to happen. But it all starts with identifying a print personality. Once we get there, the reactions can tell us if it's a reaction or not, because I want you to understand something. If we have a stock that has a print personality of 15 prints when it comes into controlling prints, and we get 6 prints, is that as a reaction? Is that a reaction really? Or 6 prints a reaction to a print personality of 15? Now, do we see 15 print personalities very often? No, but if we went to series, we would. But no, it's not. So it's all relative to just how the stock is actually trading. So that's why personality is not wrong at all, and prints aren't wrong. It's just print personality. That's where we start. So yes, obsess about it. All right. On days where cheap stocks and very hot aren't very hot, and everyday stocks are brought up now and then, I second guess my expectations for what should be in the prints and the reaction prints are getting. Who sets the expectations for what print should be within a stock? Very important. Who sets the expectations? Market makers. Well, let's think of it this way. Do you set them? Do I go out there and look for you, Joe, or you, Eric, in what the stock should show? No, unfortunately, I do not. Well, market makers, they set the expectations. So from those expectations, we still trade the exact same way, but we have to identify what those expectations are. Because if someone just comes, for instance, we have Apple up right now. We just keep seeing this one print and one print and one print and one print. Is this setting any expectation for what I can read coming out of this stock right now? None, right? There's just nothing there. So we need to find a dominant market maker, which technically we need to find controlling prints. And from the average control, the amount of controlling prints that we see, or just the average amount of bursts that we see out there, we can now identify what we need to see as a reaction. Doesn't matter what the ticker is. Make sense? It's an excellent question, but all stocks trade exactly the same. It's not simple. Guess what? If they buy a ton of shares, God, they got to make money. If they short a ton of shares, they have to make money. It's that simple. So they all work the same. It's just a matter of identifying what actually makes sense for them having to make money. Because right now, 1310, this print right here, if we had a burst of them, I would love that, because that would show us the stock needs to go up, even with those prints at 130 that we saw earlier. But there's just nothing here. See what I mean? There's no real expectation. So our print personality is pretty low. So I want you to think about Apple for a second today. All right. And if our print personality is that low and we really haven't seen much of it coming out, what does that tell us about this move up? Now, we could also see it here on the daily and understand it as well. But what does that tell us about the move up if there's no real print personality? Is there substance behind it? Yeah, not much substance. So what does that tell us? Should we be looking for a pullback day? Yeah, see how that works? But it's Apple. Don't care what the name brand is. It's just a matter of understanding what's relative and understanding the print personality. That's simple. Well, it's simple in theory, but obviously, it takes a little time to understand. All right, moving on. So I love this question, and we're going to talk a little bit about psychology for a second. As new traders, what should our win to loss percentage be? And what should be the overall goal? Anyone ever think about that before? It's an excellent question, in my opinion. Excellent question. What do we think? We have classes that are going to be coming up in the next few weeks. So we're now into September. More than I'm going to give you guys the date probably early next week. But we have classes coming up. And the reason I ask you guys questions, because I want to see how you think. And when I see how you think, I can make great classes coming into them. But what do we think? What should your percentage be? What should a win percentage of a newer trader be? Throw out a number. 50%. So that's both. I think in theory we should be above 50%, 60%. Interesting. As a newer trader, I want you to think about something real quick. As a newer trader, okay, basically, are there trades a coin flip for the most part? Depending, obviously, on 60%, and yeah, 60%. That's insane. All right. I was talking to Doug before about something that we're going to get into in a second, but most hedge funds are about 50%, give or take. A little bit less, a little bit more, depending. And now, don't get me wrong, that's, there's a lot more that goes into there. But 60%, as a 60% trader, that's a really, really good trader. But I'm going to flip your question because I'm not going to give you a percentage answer. All right, there's two ways of going about something. All right, and this is, something that when we really, kind of look at, I want you to think about mentally. So as a newer trader, should percentage really mean much to us? Should percentages really mean much? Win percentage. So the answer is no. Okay, so your win percentage as a brand new trader should not mean much because guess what? It's going to be discouraging for the most part. All right, but there's two ways of looking at it. Okay, so there's looking at it as building a productive habit, and there's a way of looking at your win percentage. So when I say newer trader, I mean anywhere from basically starting off to about a year. After a year, you really should start looking at your actual percentage. I've been nodding my head over this, noodling my head over this for a while because it feels like I'm thinking about money when I look at this, but I also want to make progress. Okay, so your percentage itself, after a year, you need to start looking at that because you should see small growths within it. But everyone thinks, so I want to start here. What does everyone think a great trader's win percentage is? Really great trader, what do you think their win percentage is? 60% plus? Okay, so Alex, you're already on top. But yeah, that's a 60% plus. So I was talking to Doug about it before. I'm about 78%. And the reason behind it is because this summer, usually this summer, I'll have a less of a percent because there's just not much trading. So I take shots at things because I can afford them. All right, but this summer has been the best summer that we've ever seen in our lives, and there's just been so many great trades out there that it's been easy, a lot easier to trade. All right, but on average, I'm anywhere between about 68 to 80, somewhere in there. I go through, different goals. So what's the most important part of trading? Most important part, if we want to be a successful trader, is what? Cutting losses. That's it. It's taking off our losses. So anything over 60%, you're in the 6 to 10, well, not 10, 6 to 9 level of a trader out of 10. That's a great percentage. Okay, but cutting your losses is what makes it, and letting your winners actually run. But Doug made a great point when we were talking before, and he says, because we know everything is the thing, traders need to focus on process goals, not outcome goals. Outcome goals are making X amount, or even being a 65% trader, are tough when you can't control the outcome of a stock and can lead to a darker side effects. Process goals keep you trading and improving all the time. So there's a certain point where your process goals need to have become a habit. Because if you don't have a habit after a year, have you been working on that habit? I want you to really think about that. If you've been working on building a habit for a year, do you have a habit? Should it take you a year to build a habit? So that's kind of an ambiguous answer, because it might. There's some habits that, so what if I asked you, how long should it take you to be in the habit of seeing every single variable that could possibly be going on in a stock? So many, a lot of us, and it comes from, the psychology part, a lot of it comes from our parents, is where, we don't understand when we're good enough. Okay, we're always expecting to be 100%, because that's just how society has raised us. That's how our parents, I know my parents, that's how I raised. I remember one time I threw a no-hitter, but I walked 2 people. So, we focused on the walking of 2 people, not on the fact I just threw a no-hitter. But that's just how but we got to kind of break out of that a little bit, because it depends on what the habit is going to be. Now, if I ask you, okay, should it take you more than 28 days to get into a habit of waking up at the same exact time every single day? Different habits warrant different percentages and different time frames. But should it take you more than 28 days and it's really 21 days, but should it take you more than a month to wake up the same time every single day? Ever? You see how that kind of works? Because if you can't wake up at the same time every single day, you probably have problems in a lot of other areas. It's not that hard. You set an alarm and you wake up, and it's just it works that way. So really, there's 2 ways of looking at it. First of all, your percentages, I'm going to get into your percentages after a year, because when I think of a newer trader, I think from day 1 to a year. Okay, you should essentially at that point know most of the core concepts that come into it, but those core concepts should all be being just process driven, is habit driven. The habit is the most important part of trading. All right, why are so many people good at sim trading, but they suck when actual money comes into it? What's the actual psychological reason behind that? It's very obvious. We should all know this. Feeling vulnerable. Well, to an extent, there's really 2 issues that come with that. Number 1, okay, is if you can trade when you're not using real money, but you can't trade when you're actually using real money. What's the problem there? Very simple. Yeah, emotional discipline. That's it. Because you're worried about money. You're thinking about money. Okay, it's that simple. All right, but what's the other part of it? Because thinking about money isn't everything. There's another reason why a person is a great trader with sim, but then they move to money and they suck. And I'm going to blatantly say suck. There's another reason. What is it? It's you. Thinking about money is the number one reason why sim traders, it doesn't, someone that can sim trade, okay, can make money, but somebody that's trading actual money can't make money when they switch over to that, because that's thinking about money. That's where it starts. But the second part of it is you mentally. Okay, you're not playing a game. You're not seeing everything that's happening because you're too consumed over being correct. Anyone here like to be wrong? Does anyone here like to be wrong, as Apple and Donna is just becoming a billionaire? Anybody here like to be wrong? It's one of the biggest fears that people have. People would rather die than publicly speak or be wrong. Do you realize that? You know how crazy that is to me? I mean, I'd rather be wrong or have to get up in front of people and speak than but that's just, it's the human nature part that comes into it. So we're so afraid of being wrong. Even when you get the money part out, you can't focus on what is showing. Anyone ever have a price target and hold it because it didn't hit that price target? And this is a big one. This is why people are up $2 in a trade and then lose money. Has that ever happened literally today? Because it didn't hit your price target. Because even while you were up, you were thinking, I'm not right yet. But can anything happen within the market? Things change. So it's a mental aspect of understanding you're going to be wrong. Everything in life, there's no person ever in life that hasn't been wrong once. Okay, and when I say once, obviously millions of times. Okay, throughout the times of my life, the amount of times I've been wrong, Jesus, it's a lot. All right, so I don't want you, for the first year, I don't want you to think about percentages. I want you to think about your habits. So what everyone should do is I want you to write down a list of successful trading habits. And we'll talk about it for a second just so I can kind of point you in the right direction. But I want you to write down a list of successful trading habits. Where does it start? Where does the first successful trading habit start? What should be number one on your list? Waking up. It's very simple. In order to trade, you have to wake up, right? And a price target in the end is what you're assigned for a market maker making this position. So there's no need to be completely right. No, because then you're looking to hit tops and bottoms, which comes back to not wanting to be wrong. Absolutely, no question. But waking up, okay? I literally wake, and we talked about this in a previous Traders Exchange, but we talked about the armed services and how they basically break people down to then build them into a finely tuned machine. All right, but if you can't start by showing up at the same time every single morning, now keep in mind, I know some people, you might have work in different shifts and it might be different, but guess what? If you work Monday, Tuesday, Wednesday, Thursday, Friday, okay, and on Monday and Tuesday, you work at, I don't know, whatever time, and then Tuesday, Wednesday, Friday, you work at a certain time, well, you should have a habit of waking up the same time of every day on the opposite shift. Okay, and if you work just sporadically, well, then you should get a schedule, because I hate not having a schedule, but to each their own. But do you understand what I mean here? So waking up is the number one thing that you have to do. Why can't you wake up at the same time? So it's not about waking up at the same time. It's about building easy habits. How hard is it to wake up and set an alarm and wake up? On a level of 1 to 10, how hard is that? 1 to 10, how hard is it to wait? It's not even 1. Come on. I mean, it's very simple. But that habit alone, is that habit going to help you trade? Nope, not at all. But it's going to start training your brain to build habits. So you start with easy habits, it makes it easier to progress. What would be number 2? So number 1 is waking up. Number 2, the number 2 habit of a successful trader would be something like what? And obviously everyone's list is going to be a little bit different. But what would be number 2? What do you think? Well, so turning on your platform, that should be part of waking up. You don't have to break it down that or whatever you do, for your morning routine, everyone's is going to be a little bit different. Mine is I put on music, so we're going to skip that because some people do different things. But yeah, creating a watch list. Can you be a successful trader without having a watch list? Nope, can't happen. Can you have a game plan if you're not creating a watch list and you show up at 9:31 right after the market opened and then start asking questions? Can you become a successful trader? Nope, can't happen. So waking up, and by waking up, let's put in parentheses before the open. And number two would be creating a watch list, because that's a habit of a successful trader. Every day, day in, day out, they scan for a watch list. I have a watch list before, and you should all have a watch list before. You should just be checking your watch list on mine and then taking your game plans and seeing what you saw and just comparing it to me. You shouldn't be waiting for me to tell you. I found the pre-market is really helpful to be a part of. Absolutely. No question. You guys remember from 8:50, I would say, hello to everyone at 8:15, then I play with my daughter. Well, guess what? All of a sudden the pre-market started getting great. So I changed my habit a little bit. I was there every second. I was there from 8:15 until obviously, our 9 a.m. meeting, and then, for the rest of the morning. Exactly. If you're waking up, if your alarm is set at 8:58, okay, or 9:28, are you going to be a successful trader? No, not going to happen. What would be next? In your guys' cases, get into the freaking meeting, because not for nothing, but I've been doing this for a while, and I've kind of proven, to the most part, that I have an idea of what I'm doing. So why not hear what I have to say? Right? If you're all trading like me, you're all learning how I trade, and you're all, and obviously, as you go along, you're going to start taking on your own little parts of it. But wouldn't you want to hear it? Oh, absolutely. Your notes, but when do your notes start? As soon as you open your platform, your notes should start. You should know everything that you see, to the point where if there's nothing going on, guys, I tell you, I don't know. I have no idea. Those mornings are so easy for me because I don't have to write anything down. I really don't have to do anything, but I also hate them because I can't really trade much. But do you see where we're going with this? There's certain habits that need to be built, and they're not based off of percentages. So the beginning part, a beginning trader, I wouldn't worry about percentages at all. What I would worry about is building those habits. Okay, and as Doug said, not outcome goals, but process goals. Because can you ever have a positive outcome without having a habit built? So I know I kind of hijacked your question, Oscar, but I'm going to get to your actual question in a second. Luck does not last in the market, promise you. Oh, I've seen, unfortunately. Yeah, well, how can you make a living off luck? I mean, maybe there's someone out there that can. Never met them. All right, so now let's talk about after your first year, because after your first year, should you be looking at percentages? I mean, technically it could be 6 months. I've seen people do it as quick as 2 months. It really depends on the amount of work you're putting in, but I'm going to give it up to a year. After a year, it really should be after 6 months. It should not take you longer than 6 months to learn the core concepts if you're really putting your effort into it. And if you don't put your effort into it, you're going to fail anyway. So I could give a shit less. I don't even need to talk about you. So let's call it 6 months. Even people who get lucky and win the lottery usually lose all their money. Yeah, they buy 18 airplanes to put on the house they bought and then run out of money. I don't know if anyone saw that show, but yeah. Anyway, okay, so now let's talk about actual percentages. What after 6 months should your percentages be? And I'm going to start, I'll give you a little bit of an easier answer. Should they be over 50% yet? Should your percentages be over 50% after that? Yeah, it's just no way. Okay, 50%, you have to understand 50%, I could teach you how out of 5 trades, how to lose 4 and make one good trade and make money. 50% is a good percentage. We just talked about most hedge funds are around that. They're lower. Most hedge funds are lower than that because they know when to cut a position. So we know that's the number one part of trading. So no, you can't put yourself that higher. Realistically, if you keep track of every number, you should be probably in the 30 to 35% range. That's realistic. I want you to understand something. Do you know how high 70% is? You know how I tell you guys all the time, I wake up every morning knowing I'm going to lose a trade? Guess what? Because I'll never be 100%. No one will. You might have 100% days, but you'll never be 100%. It's impossible. There's always going to be that stock that does some stupid thing or that, that happens. Okay, but 70% is ridiculous. So we got to think, after in the beginning part, you're going to be 30 to 35%. Okay, that doesn't mean if you're 25 or 20% that you're not doing things as well. But guess what? How do we figure out why our percentages suck? Because not for nothing, in my opinion, 20% sucks. 30% sucks because I'm not even close to that. But that's not bad because guess what? You know what my percentages in the beginning of my trading were? I wish I would have read this question previously because I would have actually looked at, actually never mind. I wouldn't have. I have so much paperwork and stuff to get to my actual journals from them. Would take a lot of time. Evaluating yourself. Is 25, let's call it 30. Is 30% to 32% a big deal? No, I do not use TradeView. Everything I do is by hand. I did in the beginning though, I did use TradeView. But we're talking about, 7 years ago, maybe is when I stopped using it. Because I just always found it better to do it myself. And doing the numbers also has kind of like a therapeutic way of me looking at my trades for me because it helps me. It's just the way that it works. But I like doing my things by hand. Remember, he was assuming you were taking the high percentage trades and not simply fearing messing up those percentages and taking very few trades. I'd rather be 60% taking all the right trades and not 70% dead on. It's a very great point. I'm talking about taking the trades that you see and not picking and choosing. What happens to people that pick and choose? What happens to the percentages? What happens to their percentages? They either they're stagnant, okay, they tread water, or they start getting lower because now you're trying to figure out what the market is doing. Okay, when we see an entry, we get in because that means someone needs to make money. Okay, the best trades, every trade I've ever had that moved over $100. Okay, did I know that? Could I have picked that out? Is that possible? No, hell no. It's called luck. But does everyone know what the definition of luck is? It's pretty much just, it happened. Okay, but when your opportunity meets preparedness, that's when you get lucky. So there's different types of luck. There's I'm lucky, which lasts for pretty much no time whatsoever because everyone knows. Almost every trader can talk about when they first started trading, make this great trade, that beginner luck type trade that comes into it. But when opportunity meets preparedness and being ready for those entries, that's how you get lucky in trading. That's how you have consistent luck. First of all, stop holding winners correctly. You're responding emotionally to your outcome. Your percentages can only change when you address your developmental needs in your process, which comes back down to what H word? Habits. Our habits are most important. So you're going to be looking from, like I said, about 30 to 35% after about 6 months. You should be in that level. Now, after you continue to go every day, you shouldn't be looking to go from 35 to 70. That's not going to happen, but you can look to go from 35 to 37.50. You can look from going 37.50 to 40, but the only way to actually accomplish that is to to continuously build that habit and continuously evaluate what you are doing. Because if you throw it up in the air and just sit there, guess what? Eventually, if you're here for long enough, after about 10 years, you'll probably get good at trading. But it's going to take so long and it's going to bring so much stress, upon you that it's not worth it. Because if you're continuously evaluating, guys, how often do you think I evaluate myself at this point? And that doesn't mean it's right, but I'm going to be honest with you. I evaluate my trade percentages constantly. The amount and to the point where, let's say it's 25,000 shares. I know what percent I am when I trade that. I know what percent I am when I trade up and up and up and whatever. But I know it to that extent because that to me is very important because it helps me evaluate that point. But how often do you think I really evaluate all of my trading? Every day, every week, every year. No, not weekly. I'm a lot lazier than that. So monthly to an extent, but not really. Quarterly. Every quarter I break down my act like really into depth into things. And you know why I do that? There's one reason I do it quarterly. And it's really pretty taxes. That's really why it is. Because at this point, guys, I know how to trade. When I take a trade and it's the wrong trade, I knew it was the wrong trade. There's very rarely that's going to happen. It's just because I've been building this habit for so long. But I want you to understand something. The work you put in right now to get to that point, do you think you have to do it forever? I actually heard somewhere that evaluating yourself too often is detrimental. Okay, so if you evaluate yourself every second, then yeah, I could see that because then guess what? You're going to be carrying into the next trade. So if you evaluate yourself after every trade, and not days, see, you need an actual sample size. Okay, does everyone know the scientific process? How many people need to be in a sample size in order for it to actually be a valid percentage, valid number? Not 10. It's a scientific method. Not 20. 100. Number's 100. Need to be at least 100 people within a sample size to actually have that data be valid. Now, do we have to wait to make 100 trades? No, but if every day you're evaluating yourself, you can go day by day. But if you do it trade by trade, guess what's going to happen? That's why I tell you guys to do it after the market closes, not immediately afterwards. Have your notes immediately afterwards, but to actually evaluate yourself, you need to see how that day was. Because what happens if you evaluate yourself? You take a terrible trade and it just goes really far against you, and you take that trade and you evaluate yourself that morning. What's going to happen to the rest of your day? You're going to try to stop doing something that was a one-off. So I 100% agree with that. But technically it takes 100 trades to really even have a valid sample. So it works differently for everyone. I would say in the beginning phases, I did it daily. Okay. Then as time went on, weekly, and now it's quarterly because, I get the paperwork and I don't really have to do much. They give me all the numbers, so I evaluate myself. But it gets easier. And that's really what my point is that it gets a lot easier. So you might think like the same amount of work doesn't always have to go into it because it becomes second nature. You already know what's going to happen. Okay, I evaluate myself every trade because I evaluate the trade itself. So I know exactly what my percentages are going to be. Now, if those percentages change, guess what? Now I'm going to evaluate everything because I need to understand why that's happening. But when my percentages stay about the same amount, there's nothing really to evaluate unless I'm trying to get better. Now, I don't try. Do you think, and this is a big point, especially for you guys that are going to start upping your shares soon and stuff like that. Do you think I evaluate my percentages? My percentages. Do you think I'm more focused on my percentages getting higher or my shares getting higher? Which one do you think is more important to me? Shares. You know why? Am I going to get much better than 80%? I could, but is it going to be that much more? You know, should I strive to be 98% right? No, because if I'm 98% right, what does that tell you about my trading? Exactly. I'm not taking all the trades that show that they're actual trades. So I don't ever want to be 98% because I'm hindering my amount of money making ability. And guess what? I think about money, but not in the sense of I take a trade for money. I think about it in the terms of if I up my shares at the end of the week, my profit's going to be higher. It's that simple. So it gets to a certain extent where the percentages aren't as important as having the same percentages with higher shares. So there's a lot that goes into this. But in the beginning, really, 25 to 35% is what you're going to be expecting. Okay, what should you be 100% with from day one? Day one as a trader, what do you need to be 100% with? Well, journaling, that's not the wrong answer, not what I'm looking for, but that's it, cutting your losses. From day one, you should be 100% in getting out at your stop loss. ATC payments. But yes, 100% on your discipline. Day one, there's no change. That will never change. If you cannot cut your losses, you lose. You will lose as a trader. You will never be, I won't know you in a year from now. It's that simple. So that's the only thing that you could really go on there. But, the best answer, like I said, I could give you is pretty much 25 to about 35%. That's where your expectations need to be. And then you work to get small percentage wins. But the reason after every meeting, what do I always say about our percentages? Okay, let's focus today on what's going to drastically increase our trading. Increase the percentage of our trading. I say that every day to you guys in the meeting because that's it. Right now, there's two things. Okay, let's do an example. Okay, is it more important to take more trades or maximize trades? What's more important, more trades or maximize trades? So as always, I'm going to ask you why. Why is it more important to maximize? You're already in. The more entries you take, the more exposure you have. It's that simple. So by maximizing trades, that's more important. So if you find yourself, I'm not taking as many trades as I need to, okay, that's something that you need to fix at some point. But if you're not maximizing your trades, which one should you focus on today? Well, obviously you focus on maximizing, but do you see what I mean by that? Because I'm not sure everyone does, because I say the same things every day. And one of the problems by me doing that is that you kind of get numb to it. Just like every morning, I'm going to go, good morning. You know exactly what's going to happen. So you start to kind of like fade off a little bit. You can't do that. I say the same things every single day because that's what should be in your head every single day. So it's kind of like, double-edged sword. Should I not continue to say? But that's me. I'm a habit-driven person. Okay, I'm a schedule-driven person. Okay, when somebody asks me questions for 2 weeks from now, I get angry about it because I don't care about 2 weeks from now. I'll worry about 2 weeks from now, in a few, next week when I build that schedule. Everything in my life I need to be calculated. Otherwise, it literally gets me angry because I don't know. Ask me a question that's going to happen in 2 weeks, unless it's like classes or something that actually is scheduled for 2 weeks. But do you understand what I mean? So every morning we have to figure out what is going to maximize my ability to get my win percentage higher. Okay, less trades and more, and maximizing the actual trade itself is the best thing you could do. Okay, once you're in a good entry, guess what? There's no other entry to take. There's no reason to get out of a great entry for 50 cents when it could have made $2 to get into something else to make 50 cents. You see what I mean? So once again, I know I kind of hijacked that a little bit, but it makes sense to everybody. So really 25 in the beginning, 25, 35%. Anything under there, you don't have the core concept, so you need to reevaluate like the beginning, your foundations that come into that. And anything over that, you're on the right track. That's simple. All right, next question. I've noticed I've developed a bias to go long in my trades, and I'm not taking the pullback trades that I see. developed a bias to go long in my trades. I'm not taking the pullback trades that I see. For example, I will see a burst of aspirins come in at a level that shows they need to make money up, but they need to build below first. Even though I can anticipate the move down coming, I have a hard time quantifying and therefore justifying the variables for an entry. I don't want to go short on a stock because I saw prints going long. How do I work around this? All right, so I'm going to break it. That's an interesting one. So, yeah, I see that. Okay, so the first part of it is identifying, are they building or are they trading? It's the number one part. If they're building on ask print, should we ever be going long or even be looking to going long? Nope, that's black and white. If they're showing you building, you're looking for the pullback trade. Why? Well, so time frame 2, excuse me. The time frame is important looking into it, but at the same time, why, if they're building, do we not want to go long? For instance, PSV, give me 1 second. At least once a class, something goes down the wrong pipe. Okay, PSV. Why would this been a shitty long-term trade? Long trade. Not long-term, long. No one knows? So not necessarily no release, but yes, that has pop, but it's obvious building. So there's two types of building that we see. We see building that's kind of being stuck in there, but we also see obvious building. When something shows you nothing but buying, what's going to happen? If they're showing that, what to the highest percentage, and you're talking about 80% somewhere in that area is going to happen. If they're building that much up here, what does that tell us about how much they want to build down here? They have no intent on making money yet. Now, obviously, I understand that you can't short this, but there's no money to be made yet. So if they show obvious buying, okay, that means that we're looking for a short term. That's a rule of thumb. Okay, we're looking to short that stock coming in. Very simple. Okay, another obvious way of buying is something building, is something like in Walmart. So Walmart right now is showing us, okay, they showed us at 142, at 143, at 144, at 145, at 146. They just showed obvious buying over and over and over and over again. At this point, is this as a long trade, is this a good trade to take long and look for a long? So we come into the afternoon today. We're going to be looking for the stock to continue to push. Nope. Why not? Because it could. It absolutely could. It's an exception today. For the most part, it really has been trading the prints so well. So it's an exception that's following the rules. But at the same time, why? Hasn't pulled back from multiple levels, but have they hit anything that they've been doing for this move up? And think of it like this. Have they hid anything they've been doing on this move up? Nothing. So if they're not hiding, are they done building? Think about that. That sentence I just said. If they're not hiding, are they building? Of course. So you have to look at it that way, is that, yes, this stock could continue this thing could fly to 1 billion. I don't, it doesn't even matter what the number is, but that's not the trade. The trade is going to be pulling back underneath. So when you see something like that, you have to turn the switch. And I've talked about this before. I've trained lots and lots of traders. I don't know what the number is, but there's certain people that have such a hard, I see a stock, and this has been since the day one in me trading. I see a stock and I can see it the opposite. I can see it short. I can see it long. It really didn't matter to me. But there's a certain brain type that I've met that just have such a hard time being able to understand that It's the same thing down as it is up. So really the way to go about this is identify it. All right, so let's say, we'll go to Paint and we'll do this again. And I don't have my pen connected, so it's just going to be here. Okay, but let's say Walmart. Okay, so we have Walmart on our notes, and we have all our prints. Okay, ask, all these are ask. Okay, we have all of that. So one of the best ways, take your notes, identify what is Walmart today. Are they building? Are they obviously building? Okay, and based off the prints, I'm not talking about the chart, based off the print personality and the prints that they're showing, are they building, are they obviously building, or are they trading? So how do we go about that? How do we figure out what those are? So based off the print personality, guys, at each level, were they longer term prints or short term prints? And if you didn't see them, then unfortunately I'll just have to give you the answer, but most of us should have been watching this today. They were longer term prints, right? As the stock continued on its way up, have we seen much selling? No. So are they trading? Because it's a common misconception that when we see longer term prints that continue up, that they're trading to make money. But if we don't see selling, are they trading? You have to. You'd have to see selling in order for them to be trading, because if they're trading, it's time to make money, isn't it? That doesn't mean up at the top they might not take off a portion of their position to make money, but I'm talking about the amount of buying we saw. Do we see selling here at these highs in this consolidation that really shows us all of those prints are taking their money off? No, they're not. So they're not trading, even though the stock is going up. Because guess what, guys? Do the prints lie? At the end of the day, do our prints versus print personalities lie? They don't. So we know that they're not trading. So now we break it down to two things. Are they building, or are they obviously building? What do we think? Because I'm going to give you the definitions. Are they building, or are they obviously building? So why obviously building? When somebody obviously builds in a stock, what is the reaction to those prints? Someone is obviously building in a stock. What are the reactions to those prints? Well, no, well, that's what, and it shows building, but it's obviously building and not obviously building. So what's the difference? If someone's obviously building, what happens to the pullback? Remember what we talked about in the workshop. Okay, best way to understand what someone's doing is look at the reaction. Look at what it shows. And when I say reaction, I don't mean the reaction of the prints. I mean just look at what the chart does. That's simple. Okay, so they obviously building, or are they just building? Exactly. Obvious building would be instead, it would just be like, and when someone's obviously building, typically it stays in a certain range and then breaks down below. So in this case, they're just building, right? So those of you that were in the workshop, what do we notice about this last move that it made after 11 o'clock? From 11 o'clock up until, so right here, 11:25. What do we notice here? Have they taken out retail? No, they haven't yet. Why? So we know they're building, and we know they haven't taken out retail yet. Why is that? There's way more position to get. And what is that? Yeah, they're using them. And what does that tell us? What does that tell us about them? What's going to happen to this stock? I want you to think about it for a second. What's going to happen to this stock? Okay, if I had to draw a chart, oh, it's gonna get something nasty that comes into it. And when I say nasty, I mean they're showing us they're building. They're not obviously building, because obviously building would just be buy. It would be like a PSV. We're just buying and buying and buying and buying and buying that comes into it. But we know that they're not killing retail. So the only reason not to kill retail is to get them to do what? Forget about the people that have already bought. But if they're not killing retail right now, it's still showing. What is that? What are they going to do? They're herding sheep. I like that. I mean, it's not new, but they're herding the sheep. They're lining them up. Okay. There's another huge variable, and I just want you guys to say, and this is like, completely different from what we're talking about right now, but there's a huge variable that I want you guys to, does anyone know what the huge variable I'm talking about is that adds a huge percentage to what I'm saying right this second? Because I want you guys to start to learn, to see everything. Okay, 150, yes, but no. Because technically this thing doesn't need to go to 150. So you're not wrong, but you are wrong from my question. Something that just pops right out. So we take all the information we just talked about here that they're building. They're not obviously building. They're not hitting retail. They're not coming into it. Not range, because range is okay. I mean, range makes sense to a certain extent. You look right here, it was a lot more. And by the end of this day, it'll be somewhere like 30 million, somewhere in there. Okay, if you look at the high to low here, you're talking about 130.90 to 139.95, 35. So give or take, you're talking about $8. Personality, there's something that jumps out at us. I don't need to change anything on my platform. I don't need to look. It jumps right out at us. No, volume didn't fall off. Looks so pretty, name brand stock. No, guys, come on, man. All right, I'll give you a hint. There's a pattern somewhere. No, not the 5. Well, there is a flag on the 5-minute, which would make sense to continue up to lead more retail, as we just talked about. Not a consolidation on the daily. What's the pattern right here? It's a measured move. What typically happens after a measured move? Comes back. Guys, you gotta look. You gotta look and see everything. Everything on my platform is here for a reason. Actually, except this. I barely ever use this. I don't know why it's there. I think it's just filling up space. I don't remember even why I put it there. But this I barely use. But how do you miss that? How much more obvious could this get? You see what that's why we go back to how long does it take to build a habit to see every single variable that's out there. But you see what I'm saying? So now we take into their not obviously building, they're building, because obvious building means take the trade on the pullback. First pullback you see, take that trade. Okay, non-obvious pullback, non-obvious building that doesn't try to take money from retail. And look, every time we get these straight moves, we just did this workshop. We look about halfway. The next time we look a little bit higher. It's never even came close to trying to take away retail. So if they're not trying to take away retail, they're building. We have a measured move on this side, guys. And Davis, I'm going to add your variable. 150 is up there. 150 is not an easy level to be able to break too. So that is, and I don't want to discourage you on that, because you're 100%. That's a huge variable, obviously, but that's not what that wasn't the most important thing, guys. Look right here. Do you see? So the reason I just went through all of this for you, Eric, is because my answer to you is have all the variables. When there's overwhelming variables, is it hard to take a trade? So start with stocks that are overwhelming, that there's just so many things in there that we can analyze to the point that it gives you a high percentage. Just seeing ask print and taking a trade, that's going to be hard in the beginning if you have a block. So the only way to get out of a block is to get, confidence up. And the best way to get confidence up is take trades with overwhelming variables. See what I mean? It makes life easier because when you have overwhelming variables, guess what? It's such a high percentage trade, you have to take it. Now, in this case, would I take this right now? No, of course not, because it's sitting there doing nothing. But do you understand what I mean? So the overwhelming variables, when we look at the stock tomorrow, well, I have a feeling I know where it's going to be. And that doesn't mean that it won't pop up first, but we're going to get an overwhelming bar that comes down. So does that mean I need to catch it right here based off buying starting at 142? No, does it? I can wait for confirmation for it to really show us coming back down. Or it could jump up. That's how I take my swing trades. If this thing jumps up, well, now it's so far away from where it needs to go. I just need to see some selling that shows shorter term coming into a boom. I'll take the swing trade. But that's how it has to work. The easiest way to overcome a mental obstacle is to add overwhelming information to tell you this has to happen. Okay, that's what builds trust. That's why I tell you guys about the fake journal. Fake journals are great because guess what, Eric? Start writing a fake journal. And when you write over and over and over and over again, what does that do for your confidence? Because trading really at the end of the day, pushing the button comes from confidence and trusting what you see. Yeah, it builds it. So that's my best answer for you. That's really the easiest way to overcome this is start with things with overwhelming variables because it's going to show you your percentages are right. It's going to show you know what you're doing. And that's really what it comes down to. It shows you know exactly what you're doing. And once you understand you know what you're doing, that confidence, you're not going to, once you build confidence by knowing what you're doing, doesn't mean you're going to be able to take everyone right away. But then now it's time to start getting out of your comfort zone. Okay? You're going to take one. You might not take the second, you might not take the third, but then you can take the fourth. Okay, you might not take the fifth, the sixth, the seventh, and then as you go on, you're going to notice that you're going to increasingly start taking them as they're happening. But it comes down to that confidence. All right, guys, any questions? This went pretty quickly. All right, sounds good. I will talk to everybody in the chat and happy trading.